Christine, global growth is slowing, including obviously in China, but even in the world's #1 economy, the U.S. So I'm wondering what sort of bearing potentially that has on the Singapore market, because price growth is slowing. There is still growth, but growth is slowing in the prices. Transactions, volume has started to slow down. Where do we go from here?
Yes, I think it is a global trend because during the onset of the pandemic, we do see a lot of construction delays, and that has also contributed to the supply crunch for many markets, Singapore included. So in the last 2 years, I think 2024, 2025, we are going to see a lot of supply hitting the market, and that sort of slows down the price growth, although prices are still very elevated, and it's also because developers have purchased land in the last 12 months and at a very elevated price. And because of that, we are going to see quite a lot of developers being very cautious in terms of the launches. That's why you mentioned that one of the launches seems to be at a historical low. But if you were to look at some of the suburban and also the city fringe locations, the launches are still very highly sought after. I think for prime segment, Singapore is unique in the sense we have 60%. Plus, recently we also had a money laundering case. So high net worth individuals are a little bit concerned, and some of them are also facing challenges opening bank accounts in Singapore. So that has sort of slowed down the demand for the high-end segment.
So I'm not sure if you have any data. If you did, though, I think it'd be pretty interesting. You've just talked about this massive money laundering case and how that's making officials in Singapore a lot more cautious, right, about foreign money entering Singapore, including into property. What has the flow been like from Chinese nationals? I'm very curious because, there's at least anecdotal evidence that a lot of rich Chinese are still in a big hurry trying to get their money and moving their assets out of China. And at least traditionally in the past, a favorite destination has been Singapore.
I think it's also because they are quite familiar with Singapore. I mean, we are within the 6-hour zone, flight zone, so a lot of them like to send the children to Singapore, and the vast majority of the population is also Chinese speaking. That makes them feel very comfortable, although a lot of them are still conducting their business in China. They do have some offshore accounts. For example, in the past could be Hong Kong, but now there is this search in terms of risk mitigation or diversification in terms of the asset classes. That's why you can see money has been moving around, whether it's Dubai, London, Singapore, or Hong Kong, because right now in the race to create more family offices, we do see some of the families are going back to Hong Kong to set up their family offices to manage the money in the Asia Pacific region. So from that aspect, I think because the bar to entry is kind of high for Singapore at the moment for family offices, we do see some high net worth individuals going to other parts of the world. And that can actually bode well for Hong Kong residential market, although it's in a very challenging phase right now.